What's going on, everybody? It's Stas here. So the stock market was red today, guys. Yet again, the S&P 500 down 5 points, down 0.1%. The Dow Jones ended up going down 0.1% as well, down 20 points. And the NASDAQ 100 sold off over 85 points, down about 0.7% on the day. And in this video, we're going to be talking more about the stock market, breaking down some technicals, going over whether or not we're in a bull trap right now. Is there more upside? Is there downside in the market? And I also want to talk to you guys about what I personally did and a bunch of other stocks that I'm actually looking to buy right now in the stock market. So if you guys find value, hit the like button for me. Make sure to subscribe to the channel and check out all the free links down below in the description box, the Discord, Facebook, and if you guys want 2 free stocks, they're all linked right down below. So without further ado, let's get right into the video. Starting off here with the S&P 500 on this 5-day, 5-minute chart. And if you guys watched my video yesterday and the day before that, we've been talking about the 5-day, 5-minute time frame here being very important, because overall, if we pull out here on let's say the 20-day chart, we can see the S&P is quite overbought. Well, it was overbought, and we called that out. We said RSI was off the page, S&P, and honestly the markets in general needed a pull down, and lo and behold, we got the pull down. So now to see what's going on in obviously the past couple of days, I like using smaller time frame charts, preferably the 5-day, 5-minute. And what this time frame tells me is, yeah, we're overall uptrending in the larger time frames, but in the small time frames, we're still downtrending. We're actually downtrending right now, the past 3 days in the market. Take a look. We failed to break out here on the 13th, on the 14th, and now, despite us doing well today all day, we failed breaking out of the moving average. Take a look here, the 180 SMA on this 5-day, 5-minute chart, this gold trend line here. This has been a resistance today, yesterday, and the day before, right? And the 50 SMA as well, although we did break out of that. But overall, the downtrend is still intact. So what happened today, guys? We ended up gapping down. So the Bears the Bears overall won the day. And initially in the morning, they were really winning, right? They gapped down. S&P went from 34.80 down to about, let's say, 34.40, 34.50. So we saw a pretty sizable gap down this morning of about 1%. But notice we just filled the gap, and we're pretty much right where we were yesterday at the close, and lower than where we were yesterday at the close. So this, in my eyes, is a red flag for the Bulls, right? The Bears they won the day. The Bulls failed to get out of yesterday's lows. That's a big problem. And you guys can see the past couple of days, it's been a pattern. It's happened every day, right? Today, we pretty much failed breaking out of yesterday's lows. And yesterday, we failed to break out of the previous day's lows. I mean, you guys can see it here. You know, yesterday we consolidated at 34.85. We rallied up to about 3,500, but 3,500 is where we got rejected, which is where we were at on the previous day, at the low of the previous day. You guys get what I'm saying, right? Let me draw out this trend line. So every day that goes by, we're pretty much failing to break out of the previous day's lows. And it's the same thing today. We fail breaking out. We're still at the resistance of this downtrend. So this could be a bull trap. Right now, it's setting up as a potential bull trap. And how would we know for sure? If we end up gapping down tomorrow, let's say the large caps are getting crushed pre-market, futures are getting crushed pre-market, and we get another gap down like we saw today, that is going to be a textbook bull trap, right? And what is a bull trap, if you guys don't know? I talk about it here on the channel a good amount of times. You know, we make a video going over bull traps, and we talk about it within the videos here, the daily updates. And a bull trap pretty much is a rally that brings in a lot of bulls in an overall downtrend. And a lot of the time, it suckers them in it traps them in before the markets go down even lower. So let's say I'm just Joe Schmo here. I ended up buying some stocks right at the at the peak here, about 30 minutes before the market closed, expecting to continue to rally in the market, and all of a sudden we get the gap down. Well, I got trapped. That is what a bull trap is, guys, right? Exactly that in layman's terms. So overall, watch out for tomorrow. What do we do at 34.80, which was the support from yesterday, the lows from yesterday? If we fail to break out of there and we gap down, we're going lower. And where could we go on the S&P? Let's say, for example, I'd say we might be going down to 34.30. That's the next lower low that we could hit here, to continue the downtrend. And that would put us right at a big level of support. And from there, we might actually turn back around. We'll see how it ends up playing out. But at this point, guys, be careful not to get caught in the bull trap. And obviously, if you're watching this video and you already bought some stocks today, I'm not saying that you're completely screwed, but I'm just saying, hey, be careful, manage your risk. The sell-off might not be over. And you guys can see the same technicals pretty much here on the Dow Jones. Let me pull up this 5-day, 5-minute. Today, we pretty much failed breaking out of the lows from yesterday, and we closed right under where we ended up closing yesterday. Yesterday, we closed at 28,500, and we closed right around there, a little bit under it today. So you guys can see, the bulls are losing, the bears are winning in the short term, right? And we're still in an overall downtrend. If let me just erase this and redraw it. You guys can see the past 3-4 days on the Dow, we're still in a downtrend. So watch out for 28,500. If that breaks on the upside, we might see that breakout. Maybe a gap fill up to about 28,700. That's the next big level of resistance here. But if the futures are down, large caps are down tomorrow, we might get a gap down and we might go lower. And the lower low here, especially if 28,400 breaks, which is another big support that we actually closed above here on the Dow, if that breaks, guys, we're going straight to low 28,000s. I'm thinking 28,200. And if that breaks, oh man, we might be going back to the high 27,000s, guys. That's where I'm thinking. So overall, you guys get the point. We're rallying, but we're still within the downtrend in the past couple of days, and it's textbook, right? It's pretty textbook here. We gapped down and we filled the gap on the Dow, on the S&P, and you guys can see it here on the NASDAQ 100. Same thing. We gapped down this morning, we filled the gap, but we failed breaking out of the low from yesterday. Take a look. Yesterday, we double bottomed at 11,900. We broke out, closed at about 12,000-ish, right? And today, we failed right at 11,900. And a lot of people, well, not a lot of people, but there are people out there that are like, Stas, technicals don't work. And that's a whole bunch of nonsense, guys. If you watch my channel, if you watch the updates, and if you watch the charts yourselves, you understand technicals work. They really do work. And when you map things out technically like this, and whichever way you guys do it, there's different techniques and so forth, and you use fundamentals together, that's a perfect formula, right? And yeah, it does kind of depend on what your strategy is, whether you're a day trader, a swing trader, and even a long-term investor. It kind of does depend, and it varies between those different strategies. But overall, generally speaking, I like having a fundamental approach to the market and a technical approach, both together. I found that works. If I neglect the technicals, sometimes it comes back to bite me. And if I neglect the fundamentals, especially on long-term investments, that really comes back to bite me, guys, because long-term investments, I'll be honest, fundamentals are more important if you're looking to hold long-term opposed to technicals. And if you're looking for short-term stuff, technicals are more important than fundamentals. And let me know what are your thoughts on that down below. I'd love to know your opinion there. But overall, that's my opinion. So that's the market update, right? Bull trap, very possible here, and I'd love to know your thoughts down below in the comments. And jobless claims came out today, guys, which maybe contributed to that little gap down we saw earlier in the day, but again, we ended up filling that gap across the day. And jobless claims, they ended up coming in at 898,000, which actually came above what Wall Street ended up estimating of around 830,000. That was actually the highest level of jobless claims since August 22nd, guys. So what is that? Almost 2 months? And obviously that's a sign of the current struggle in the economy. So that unexpected beat there in jobless claims ended up maybe dropping the markets a bit. And on top of that, we have stimulus. And who knows what's going to happen with stimulus, guys. Again, I'm not a stimulus channel. I'm a stock market channel. Go ahead, watch some stimulus videos to get a more in-depth there. But at this point, they're still going back and forth. President Trump said today he would actually raise his offer for a stimulus package above the current $1.8 trillion. The Democrats aren't taking that. And the House of Representatives earlier, they passed what, like a $2.2 trillion bill. The Senate rejected it. So it's just it's an ongoing battle at this point, and who knows what's going to happen. Do we get a stimulus package before the election? If they do, that taints the Democrats. That's a win for Trump. But if they wait until after it's going to be better for the Democrats if Trump loses. So it's just a lot of politics back and forth. And that's another thing I don't like talking about here on the channel is politics, guys. But at the end of the day, it's the stimulus is all politics. Let's just be honest. And I'd love to know your thoughts about that down below in the comments. So that's the market update. Little news there on stimulus, jobless claims. Now let's get into earnings reports. There's not really anything crazy to go over. Obviously, I've been talking about a lot of banks. We had J.P. Morgan, Goldman Sachs. We had I was about to say J.P. Morgan again. We had Bank of America report. And it's they did well. A lot of them did well. Wells Fargo, they didn't do that well. But Morgan Stanley here, which reported today, ended up doing pretty well. EPS came in at $1.59 versus $1.28 estimated, and revenue came in at $11.7 billion versus $10.64 billion. And on this news, Morgan Stanley ended up going green, up over 1%, up 70 cents on the day, and it pulled a green day as the markets in general were red. And we all know that banking stocks have been getting crushed, and honestly, I'll be the first to tell you, I'm not the biggest bank guy. I mean, I understand, obviously now with the current interest rate environment, the banks are suffering, and with the whole thing with obviously with CV, the crisis going on, they're struggling. But I mean, as a trade, long term, I don't really own many banks, but as a trade, I would really be interested in Morgan Stanley here if we're able to break. I mean, there's a big resistance coming up at 51.60 to about $52. I mean, if we're able to break this level, there could be some head of steam here. And honestly, guys, now that I'm looking at the chart, geez, Morgan Stanley has actually done very well compared to some of the other banks. This has gone from 56 to 27 back in March, and now it's filled the gap pretty much all the way back up to where it was pre-crisis. So maybe we have more upside to really fill the gap completely from 52 to 56. That's interesting. And quickly taking a look at some other banks just to show you, J.P. Morgan, I mean, it really hasn't recovered much. It's still down a good $30, $40 per share from the pre-crisis levels. Wells Fargo, don't even get me started on Wells Fargo, guys. It's down a ton. Bank of America is still down a ton as well. So I'm impressed. Morgan Stanley stock price, I'm pretty impressed with how it's holding up here, considering many of the other banks have been crushed. And if you guys have more insight on the banks, you want to let me know why Morgan Stanley is doing better. Hey, again, I'm not a bank expert. That's not my industry of choice. But yeah, if you have any thoughts, let me know in the comments. And let's get into some other stocks here that oh my gosh, I almost forgot. What did I do today? I didn't do anything today, guys. I did not do anything today, and I'm still holding on to my current swings. And my swings here, and you guys know I've been talking about these for weeks at this point, My main swings are Electronic Arts, Apple, Workhorse, and Intel, right? And overall, I'm in those positions with around, I'd say, 40 to 50% of my portfolio in my my trading account, swing account, and I'm in a lot of cash as well. I'll be honest, guys. I'm in a lot of cash, arguably too much cash, right? Maybe a little bit too much cash, being around half cash at this point in the trading account. And I'm in EA at about 132.95. You might as well just call it 133. And I'm down on that position right now. We ended up going down about 1%, but I'm not too worried, guys. I'm planning on holding onto this one for a couple of months. I like it, especially above 134, 135. I think it's due for a breakout above that level, so I'm holding on. I think there's about 10% upside from where we are right now on Electronic Arts. And Apple, let's talk about Apple, guys. It did pretty well today, although it closed red, down 0.4%. You guys can see earlier in the day, we actually hit about 117 pre-market, 118 when the market opened, but on the 5-day, 5-minute, we're actually breaking out of the downtrend, believe it or not. Remember, we saw the overall markets are still in the downtrend on the 5-day, 5-minute, but Apple is outperforming, it seems like. It's breaking out. I'm liking that. That's a very good sign, and it's showing strength from the bulls here on this stock, and especially at about 118, 120, it's showing how strong of a support that level is. So that's actually really exciting for me as I'm holding on to Apple here at about $115 per share. It seems like it's tuning up for some sort of rally, right? Hit the higher low. Uptrend is holding nicely, so we'll see if this continues on AAPL, and I'm pretty confident it will, or else I wouldn't have my money in it, guys. And we have earnings coming up here on the 29th, which is it's exactly 2 weeks from today. So we'll see what happens there with Apple when it comes to earnings. And I'm still in Workhorse, which it's getting a bit ugly, guys, but I'm still holding strong. I'm not going to be shaken out here. Workhorse, I'm in at about $24, so I'm down a little bit on this position, but overall we're holding $20, $22. That's a big level of support that I'm thinking technically it needs to hold that, or else we might, honestly, guys, I know you might be scared if I say this, but if we break $20, we might see the high teens, but I don't think we're going to get that low. I mean, honestly, I don't think we're going to get that low. It's already pretty overbought, or oversold rather. It's been beaten down for about 3-4 days in a row. Actually, let me double check that for you guys. It's been 3 days in a row. Yes, 3 days in a row. It's been beaten down, arguably 4 days, because the day before that, it hit 30, but it went from $30 to 26 in the same day, from 26 down to 22 the next day, and then from 22 down to about the lower 22s. Now it actually hit 21.50 today, so the Bears are still in charge in Workhorse, but again, I don't really see it going much lower than $20, if that. I mean, tomorrow, if we saw a big pop, that wouldn't surprise me either. I think we're due for some sort of rally right now. The question is when, obviously. That's the million-dollar question. And I'm also still in Intel INTC, which pulled a green day today, up 0.5%. I'm in at 52.25, and I'm really liking how Intel held that higher low on the 4-hour chart on that 50 SMA today, which is why I ended up holding on to it, and we rallied into the close, and again, we closed up 0.5%, so that's showing the strength in the bulls here for pulling a green day despite the overall markets being red. And we have upside still, in my opinion. $57 is my higher end price target here on the 4-hour chart, and I'd be comfortable taking profits between $55 and maybe even $56 as well. So overall, guys, that's what I'm doing. I'm in Intel, I'm in EA, I'm in Workhorse, and I'm in Apple. So let me know down below in the comments, what are you guys doing? And I've just been playing it safe, right? I'm not adding crazy to any positions. I'm not really day trading right now either, although today would have been a great day to day trade, but I didn't. Quite honestly, I didn't. So yeah, let me know your comments down below. Now let's talk about some other stocks here. I got a lot of comments yesterday about Fastly, and let me tell you guys, I think I checked out Fastly. I think it was right after I got done filming yesterday's video, and my jaw dropped. I mean, if I saw it yesterday, I would have covered it in yesterday's video, but the timing there was a bit off since I filmed before. But either way, we're covering it right now, and Fastly ended up going down, this is unbelievable, from $130 per share. It gapped down all the way to about $87, guys. That's a shed of 35%. And whenever a company loses that much money, a percentage in a day, you guys have to realize it's not just stocks. It's not just, it is a stock, but it's not just numbers on a screen. You guys have to realize market capitalization is what the company's worth, right? Let's say Fastly, I'm not sure what it was, but let's say it was a $100 billion company, hypothetically. It's not that much, I know that for sure, but let's say it was $100 billion and it drops 35%. You guys have to realize that's a lot of money, huge amount of money that the company sheds. It'd go from $100 billion in that hypothetical scenario to $65 billion. I mean, that's no joke. It's losing a lot. I mean, it lost a lot. And why is this? Well, Fastly shares were in free fall, like I just said, after the content delivery and edge computing software or company reduced its guidance for the third quarter, apparently tied to weaker than expected traffic volume from the social media service TikTok. And this came from the Fastly itself in a written statement. Due to the impacts of the uncertain geopolitical environment, usage of Fastly's platform by its previously disclosed largest customer did not meet expectations, resulting in a corresponding significant reduction in revenue from this customer. End quote there. That's what Fastly said. And guys, I mean, TikTok made about 12% in August. We saw Fastly disclose TikTok is its biggest customer and accounted for about 12% of the revenue in the June quarter. And now Fastly expects to report revenue of $70 million to $71 million for the quarter ending September 30th, down from a previous estimate range of $73.5 million to $75.5 million. The company reported. The company will actually report results on the 28th of this month. So the question is this overblown? Is this overblown? I mean, the company now expects $70 million to $71 million compared to $73 to $75 million. So it's not that crazy. And with TikTok, who knows what's going to happen there? I mean, yeah, that's the biggest customer. So it being a bit rocky there, that is a bit worrisome. But the stock arguably got a bit of an overreaction here. Again, 35%. I mean, that is no joke. And if we zoom in a bit, actually, no, before we do that, take a look at where it's consolidating, right around $88 to $90, which happens to be an older resistance from back in June, older resistance from back in July, and it has been a support in the past as well. So $88, $90, arguably here, could be where it consolidates for a little bit. And if we zoom in a bit on the 5-day, 5-minute, we can see we've pretty much been consolidating around $85, $88, $89 ever since yesterday. And obviously, it's not a lot of time of consolidation. We definitely could go lower, but it is a good sign that we're holding this level right now, about $88, $87, $89. So for me, guys, I'm not jumping in quite yet, knowing very well that we could go lower. The sell-off might not be done yet. But if we see a couple of days of consolidation above $89 and we slowly get a confirmation of a push back up into the 90s, that is where we might be able to get a trade. But let's say again, tomorrow we gap down. This could go lower. Don't be surprised if we go into the 70s again. I'm not trying to scare you guys, but the technicals don't lie. If we break 88, we could be going straight down to 77, and with a catalyst like this, it's not that bad. It's not that shocking, but we could go lower either way. That's the truth, and there could be another 10% downside. So be careful with Fastly. Overall, I'm adding it to my watch list, and I'm going to give it some time before I maybe get into it. But yeah, I'm just going to add it here, and there's ridiculous volume on there. Actually, no, let me look at it. 57 million. That's unbelievable. So Fastly, it's exchanging hands like crazy. Volume is crazy. So there could be some momentum there, either up or down. We'll see. And that's FSLY as the ticker symbol. And the next one here I'm looking at is Work, ticker symbol WRK, also known as Slack Technologies. This one's been doing well ever since earnings. It tanked. If you guys remember, I believe their billings revenue was off or something like that, if I remember correctly. This was about a month and a half ago, and it pretty much filled the entire gap from $23 up to about $33. And now you may argue, Stas, is it overbought? I don't think it's overbought, honestly, because you guys can see the RSI. Yeah, I mean, we hit 33 a couple days ago. It was arguably overbought there, but today we saw a pretty nice pull down and a nice rally back up to 33. So I'm thinking if we're able to break that wall at 33, we can see a quick squeeze up to 35, right? That's kind of the move I'm looking for here. And I know you guys like ARK Invest. I'm not sure exactly how much of Slack they own, but I do know they've been buying the stock here the past couple of weeks, and I don't like buying stocks based on other people's opinions. I always talk about that on the channel. I always do my own due diligence, and I always tell you guys to do that, but it's always a nice feeling when a big investor, especially somebody that you really respect their work, is buying a company that you're looking at, right? Whether it's Cathie Wood, Warren Buffett with Apple. When Warren Buffett was buying Apple, I'm sure people were like, heck yeah, man, I'm buying Apple too now just because Warren Buffett's buying. And if they already owned it, they're like, heck yeah, Warren Buffett's already in Apple. He's buying Apple. I own it. So I must have made the right move, right? So that's kind of what I'm thinking here. And again, always do your own due diligence, guys. Don't just buy something based off somebody else. But it gives me that added confidence, right? So Work might be able to go from 33 to 35, and there's even more upside. If it breaks 35, 36, hey, we could be going high 30s, low 40s in the next couple of months. So watch out for Slack. And the next one here is DraftKings, guys. DKNG. It got slaughtered today, down about 5.5%, filled the gap all the way down to $45. Now we're talking. I'm getting excited. I'm getting excited about this one. And quite honestly, it's still a falling knife, so you have to be a bit careful. We haven't really seen a clear-cut reversal to the upside, but you have to ask yourself, are you willing to average down into this before it gets confirmed on the uptrend, right? Are you willing to maybe hold through some downside, hold through some risk, rocky times? I might be, honestly. I might be one of those people that might do that, especially if we get another gap down. If we're able to get into the low 40s somehow, I'll probably buy some DKNG. I was even considering it today, to be honest, guys, but I held off to see what tomorrow and next week has to offer. But DKNG, with everything going on with the CV, we have the Falcons now seeing an outbreak from what I was seeing. The NFL has been battling outbreaks of you-know-what these past couple of weeks. So this could have a hindrance on the company, but that's the risk you have to take, right? Are you willing to take that risk to maybe get some of this upside? Because, guys, 65 was the high we were at literally 10 days ago. Now we're down $20 off the high. That's around 30%. So that's a pretty nice chunk of profit margin opened up. So let's see. With DKNG, I think there's potential. And MA, MasterCard's another one here. It's sold off a bit from the high a couple days ago at 355. Now it's at 338. Overall, on the 4-hour chart, you guys can see it's holding the uptrend at a higher low. And we're kind of squeezing into this wedge, this little triangle here. You guys can see it. And I'm thinking there's potential from 338 up to about 345 is the big resistance coming up, which is about a 2% move. And even above 345, we might be able to hit 355. Again, that's a big resistance, which gives it about 5% upside. And if 367 hit, that's around 8% upside. And this is one that I might even consider call options on. I'm thinking about it, guys. Maybe a couple weeks out, maybe pick up. I have to look at the strikes. Maybe some 342.5s. I'm not sure if they even have those calls out there. Again, it's different for each stock. I have to see. But if there's 342.50s or maybe 345 calls a couple weeks out, I might pick those up. I'll be honest, I might pick those up on MasterCard. And the next one here is CLX Clorox, which is not looking too pretty, but it's right at a breakout spot potentially at this 180 SMA on the 4-hour chart. And this has been beaten down. I mean, it was claimed as the CV stock because everybody's going out buying the wipes and so forth. The stock went from 154 to 250 roughly in a couple months. That's unbelievable. But since then, it got overbought. From what I saw in the stock, there was a lot of short interest back then. Not too sure if there still is a lot right now, but the stock got beaten down from 245 to 204. Now it's pushing back up, and we're about to test 220, guys. 220 is that potential breakout spot where if we break, there's upside, maybe up for to 230, maybe 235, right around this point on the 4 hours. So keep an eye on Clorox and two other ones here, guys. CRM, we talked about this yesterday. Salesforce, I think UBS upgraded them to a buy, or maybe not a buy. I think it was a price hike. They upgraded the price to, I think, $325 or something like that. The stock sold off about 2% today, holding on the uptrend, and it's actually in a little downtrend as well. So we're in this wedge. We have to see what direction we pick, but I think there is potential from 256 to 266, and if it breaks, even more potential from there. And you have to realize, guys, Salesforce is one of those companies that really benefited from this whole crisis. There's a lot of companies that have done poorly, gone out of business. It sucks. It's reality. That happened, but there's a lot of businesses that obviously benefited, right? You know, the Amazons of the world, the Zooms of the world, the CRM Salesforces of the world. So Salesforce will probably continue to benefit here, quite honestly, and there's upside. And I'm looking at this break, and I might even buy calls on this. So I'm looking at calls on CRM and MasterCard, but I have to dig deeper into the actual calls themselves, right? I have the idea of doing calls, but I haven't actually dug deep into the options chain quite yet. But the thing is, I'm thinking about it. So CRM, MasterCard, I'm looking at calls there, and IPOB, guys, I'm really loving this one. IPOB down 10% today. Finally, it's pulling down. It hit 27 earlier. Now we're seeing a bit of a retracement. On this 4-hour chart, you guys can see we were so overbought at $27. It's insane. And I'm thinking we're going to see a retracement to the low 20s. That's what I'm hoping, right? That would be a spot where I'd enter as a swing trade. And if you guys watched my videos a couple weeks ago, we covered IPOB when we found out Chamath's taken it public through open door public through IPOB, right? We talked about it, and I said how I picked up 100 shares in my long-term account at about $16. And ever since then, guys, I mean, the stock's gone bananas, and it has a lot of momentum, and I think it'll continue to have momentum. So watch for the pull down. If we're able to hold $21, $22, even 23, I mean, that could be a dip buy on the momentum that we're seeing here. So overall, that's it for the video. We're already 33 minutes deep, guys. And by the way, if the videos are long and you guys want to skip to a certain part, which you guys should just watch the whole video anyway, but if you guys want to switch to a certain part, timestamps are always in the description box. So the timestamps are in the description box for those of you guys out there that are interested in that. So if you guys enjoyed the video, hit the like button, subscribe to the channel. Make sure to check out the free links down below, the Strive Smart Discord, Strive Smart Facebook group. And don't forget to claim your 2 free stocks from WeBull. Those are valued up to $1,600. All you have to do is deposit $100 into the account, and that is how you get your 2 free stocks. So I'll catch you all in the next video. Thanks for watching. As always, stay safe out there. Keep crushing the markets. Peace out, guys.